The following is a presentation of TFNN. It is now time for The Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 11th marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. And my outcome is to help you to become a better money master and to provide you the tools that will help you to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. Hopefully everybody out there had a fantastic weekend. Great to be back with you. Let's go take a look at one of our tools. This is the tool that I call Preparedness is a Step to Success. Now, opportunity knocks at the door many more times than we realize. And if the moment of opportunity is not seized, it may be because we just don't recognize it or we're unprepared to seize it. So let me tell you a little fishing story out here. This is a little fishing story about an 11-year-old boy. Let's call him Stevie. And 11-year-old Stevie, he was ready and eager to seize the moment. And in preparing for a fishing trip to Canada with his father and some of his father's friends, Stevie insisted on buying a heavy-duty rod and reel so he could catch a big fish, a really big fish. Now, not wanting to dampen Stevie's enthusiasm and knowing he could use the equipment for a deep-sea excursion that he was planning, his father went ahead and he purchased the equipment. Now, when the other men saw Stevie's new fishing equipment, they joked with him, "You planning on catching a whale, Stevie?" One of them asked. "I'm going to get me a big pike." He responded confidently. "Well, you can sure get a big pike with that rig." One of the other guys laughed, and undaunted by what seemed to be, the men's lack of confidence in him, Stevie was sure he was going to catch the big fish. Now, 4 days on the lake produced really little or no fish for the men, for Stevie, and the rig really became the butt of the joke. But then suddenly, one of the men shouted, "I've got something on this thing." His pole arched and strained, and a moment later, the pole quickly straightened and the line went limp. Now, the line had been broken, and that gentleman, he was disappointed. He was disappointed that he didn't have any larger equipment. Now, as the fishing party was about to return to the cabin after another day of kind of misfortune on the lake, Stevie's line all of a sudden tightened. And at first, he thought it hooked a big log beneath the surface of the water, but then the line began to move with a force that really almost frightened Stevie, and he hooked that big fish. 45 minutes later, folks, Stevie pulled in a pike in the boat, a 32-pounder. The men were absolutely flabbergasted, envious, and respectful of Stevie, who taught them the lesson that if you want to catch a big fish out there, then you had better become prepared. Far too often, folks, we just simply don't prepare ourselves for success out there. Make sure that you are prepared, because that, folks, that is one of the steps for success out there. Let's go take a look at our markets out here. We've got the Dow futures up about 30 points right now. The ES Mini trading up 450. If you're watching us on TigerTV, you're paying attention. You're seeing my screen out there. If you're not, you're listening on the radio, maybe one of your mobile devices. Maybe you're using TFNN.mobi. We thank you for that. And you can always catch an archive of this show on Channel 9. Now, as we take a look at the markets out here, we got the NASDAQ futures up 14 as well, the Russell up 2. Let's start by taking a look at the ES Mini 30-minute chart. What it's really been doing out here has really been traveling in a sideways trading range ever since it opened last night on Sunday. We did see one of Stevie's hammer candles form at 8:30 in the morning on November the 9th out there. You had a little bullish engulfing candle as well that followed during that 9 o'clock session. And so the first move, the A to B leg, has been formed out here. If we take a look at that, we'll take a look at the A to B. We'll start with the low on the ES Mini out at the 1363.50 level. Your B point on this is going to be out at the 1 p.m. time frame. Coming in on the 9th, that high, 1388. We'll use as our C point where the market pulled back into the let's see, about 8 o'clock at night on November the 11th. Still sets up that the ES Mini wants to travel at least to the first target area of 1397, maybe 1403. What we'll see if you're watching on Tiger TV, you also see at the 1405 level happens to be the 0.618 retracement coming off of the high, and the high we're talking about goes back to the 3 a.m. time frame on November 7th when the ES Mini had traded up to a level of 1431.75. So we're going from that point, that's our high, all the way down to the low of that hammer candle that came in at 8:30 on November the 9th out there. 0.382 level, that's in essence where the market had bounced to. That exact number was about 1389.50. You actually got up to the 1388 level. That was on November the 9th out there. If we go take a look at the daily chart, let's go look at the daily chart on the ES Mini. What we'll see out here is you're looking at a little bearish downtrend channel that the ES Mini seems to be traveling in. Now, the top end of this, pretty easy to identify. Now, channel lines, folks, different than trend lines. When you're drawing channel lines, you want to make sure that you're using co-located opens and closes. So the first point that you would use would happen to be the open of the October 18th level. If you're looking at the ES Mini, that would be the price point of 1457. You then have really two additional touch points on the upside. That's going to be the close of November 6th. That's going to be the 1425.25 level, and also 1425 on the November 7th area as well. So you've got three touch points out there. Looks to me like on the downside here, the downside looks to be forming right in about where the doji candle came in to the downside on Friday. What does that mean? It really means the market is tired. So the market was tired after a continued move down out there. That doji candle doesn't mean anything more than that, really, to the downside. Today, so far this morning, created a little bit of a bullish engulfing candle. So you are getting some reversal signals. However, if you take a look at the ES Mini, it is below that 0.382 retracement, which is 1389. That really sets up a possible move down to 1340. Remember, we're coming into a new moon cycle that begins tomorrow. We've got a lot of lunar activity. You've got the new moon tomorrow. You've got it's a new moon eclipse as well. You've also got the moon at, let's see here, is it perigee or apogee tomorrow? Let me go back here and check this out. It's going to be at perigee tomorrow as well. And then there's a 4 planetary index date coming in on Thursday as well. So lots of things happening up in the skies out there. As we take a look around the world, try to get a clue as to what's going on out here. Over in Asia last night, you had the Shanghai was up 10 points. That was up about 0.5%. The Hang Seng up 0.2%, up 45 points, closing out at 21,430. The Nikkei, though, off 81 points, down almost a full percentage point. As we switch over and take a look at what's going on in Europe, let's go over to the DAX in Germany. The DAX trading up 16 points right now, out at 71.80. And when we take a look at the DAX, if you're watching on Tiger TV, one of the things that you're noticing here, again, we'll go back to that longer-term rising price channel, that rising price channel going all the way back to the open of September the 12th out there. We do see that the DAX had gotten outside of that rising price channel. As it was doing that, it was forming an A to B equals CD. We'll go ahead and put that price pattern. I believe it's a 1 to 1.272 A to B equals CD. Most certainly it was. Once you break a channel line here, especially one like this, what happens is the market, for whatever reason, tries to get back in there. It did attempt to get back in the first time back in June. That area was rejected, got back and closed back above it in the July time frame, and then really got back inside it on August the 3rd. Came back in August 3rd. That was a conviction candle out there. You take a look at a long-range bar. So at that stage said, okay, the DAX, which had been the weakest out there, now all of a sudden exhibiting, quite frankly, strength. Strength very similar to if we were to take a look at the New York Stock Exchange Index, which we'll certainly do here in a moment. But let's get back to the DAX. Now, the DAX have been traveling in the sideways horizontal range. We saw some of our markets do that as well. I believe the Dow was doing that, the S&P, but of course they broke to the downside. Those horizontal sideways trading ranges, folks, they typically resolve themselves to the upside, or not the upside, the direction that they came from. In this case here, in the case of the DAX, that was trying to resolve itself to the upside. What did it do? It went back up and it tested that area. Right in here, we had the Hurricane Sandy effect, so it was really only the DAX that we could pay attention to in the latter part of October out here. The DAX made it all the way up, and then in 2 days, really 3 days, moved all the way back down to the bottom. But Friday's action, folks, very telling out there. Because take a look at, you had price, all the talk about the fiscal cliff. You can't turn on a television station anywhere and without 2 minutes, somebody talking about the fiscal cliff out there. Well, if we take a look at the fiscal cliff, and not that it's not real, in Germany you had prices pushing down into that rising trend line, and you saw a rejection of that area on Friday. You also saw the DAX really close back inside that horizontal trading range, really going back here to that Super Mario time frame. I'm just using the top of the September 6th high. That happens to be 71.72 as my price target. But you got to give it a little bit of a range. If you're drawing it along on your charts, there's no reason that you can't pull it down just a little bit lower. You can actually pull down really right to where Friday came. You'll see that you've got a little bit of a conversion there of where horizontal support happens to hit the rising channel line out there. And so the DAX is something that we are going to want to watch here, folks. Now, no real bulls showing up inside the DAX here today. No follow through just yet, but very important to pay attention to that DAX chart. Let's go take a look at what's going on here in the currency markets. If we go, we'll start over and take a look at the Queen. We'll go over to Europe. Now, in Europe, what we were showing here was we were showing that same sideways consolidation area. You can see that level was broken. That's trading inside Super Mario Day of September the 7th out there. The euro looks like it really wants to pull back, possibly pull back into the 1.24726 area. It's trading out right now 1.27194. So that would be quite a bit of pressure that it would put on the U.S. markets. But if you just simply take a look at the euro, you take a look at today's candle out here, you don't see a whole lot of bulls inside the euro just yet. Yes, we have futures trading up here. What I suspect that we will see today, perhaps tomorrow, we'll see the markets push a little bit lower. Remember, folks, that would be probably the most bullish outcome would be for the markets to actually move lower out here because that would be moving lower coming into the next lunar cycle and whole set of lunar cycles and, again, P-index, planetary index dates that we have out there. So that is on our euro. We go over and we take a look at, let's go over to the Great British Pound out here. We'll put this up on the screen. We're looking at the daily chart of the Great British Pound. What we're seeing is the pound also traveling in a little bearish, descending price channel out here. You can see it's towards the low of its range. It's below that 0.382 level. This black horizontal line going across, that really is your next area of support there down to the 1.56665 level. It won't be a straight move down. They never are straight on the way up or the way down. 877-927-6648. Give us a call, folks. We'd love to hear from you. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN. And I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and it is Veterans Day out there, so I certainly wish to express my gratitude for all those that have and are serving each of us out there, protecting our freedom. So a great day, absolutely, for sure. Let's go back and take a look at that Great British Pound. Let's just take a look at a couple of the patterns that are out there. Taking a look at nothing more than A to B equals CDs. We're taking a look at the short-term A to B equals CD. Let's put that on the screen here first. And that's really coming off of the A point here would be about 3 in the morning on November 7th when you had the Great British Pound up at the $1.60 level. Your B point on this came down at the 6 a.m. time frame on November the 8th. We take a look at the retracement that it did. If we go and take a look at our A to B to see what that B to C retracement was, we'll see it was none other than Suite 618, that same suite number that you would come visit us if you're ever in downtown Clearwater. You want to make sure that you're using your retracement ruler, your expansion ruler out there, because the markets, that is simply helping you to measure where you're going to likely see turns in the market out here. I can't tell you why it works. I just know that it works out here, and if you're watching us on TigerTV, you'll see it was really as close to an exact 0.618 retracement as you possibly could get. That set up your C point of an A to B equals CD. Remember, 60% of the time, the A to B equals CD is going to be 1-to-1. It's the other 40% of the time that it's going to be some other expansion of that out there. And if we take a look at this, you'll see so far what it's done. It's done a 1 to 1.272 expansion. We're looking again at a intraday chart, right? So it's a 30-minute chart out here, but it just shows you the breathing patterns. The bull's trying to show up, but I haven't seen, other than these last three candles out here, that are a little bit bullish out here, not a real bullish pattern. If we take a look at the longer term, just a little bit longer term, we'll go back to the swing point prior, which would take into 7 a.m. on November the 1st out here. That's your A point. Your B point is going to come down to the level coming into 11 o'clock in the morning on November 5th. Now, there's going to be, we're going to use what was our A point that we had started with. We're going to use that now as our C point. Let's do that same thing. Let's simply come up to the Fibonacci retracement tool. Let's go to the new A that we're using, down to that B, and what we're going to see here is what? You're seeing what? 0.382, folks. That tells you when you only do a retracement of 0.382, it has a lot of energy to go in that direction that it's going to continue moving in. So only doing a 0.382 retracement, that says that's likely set up to do more than a 1-to-1 A to B equals C. You can see price, though, traveling on the right side of that C to D leg, telling you that it's losing energy. Looks to me like what the Great British Pound wants to do is move to the 1 to 1.618 level of that first A to B equals CD, and the 1-to-1 level of the a little bit larger one out there in that dollar 1.5824-ish range out there. That is on the Great British Pound. If we go take a look at the King out here, we take a look at A to B equals CD patterns out here. What we're going to see is that the King, the U.S. dollar index, has completed the 1-to-1 A to B equals CD. That's coming off of the low. The price there, 78.97. That was on October 17th. That was your A point. Your B point out here being the October 29th high, $80.43. Let's go measure our A to B retracement to identify that B to C leg. What is it that you see out there? You see that all that we've seen in a retracement in the U.S. dollar index, 0.382. Well, 0.382, what does that mean? That means we should likely see 81.56 as the next target for the U.S. dollar index. It's trading out at 81.07 right now. The bears really haven't shown up for work here just yet. That will go ahead and put pressure on the U.S. markets as well. May not be at the open, but the U.S. dollar index does not look like it is done moving to the upside. Has one other level to complete, whether that's 81.56, 82.07. Only time will tell. We'll see here. The retracement, though, thus far, coming off of the high out here, the high swing point that we would look at is July 24th, all the way down to the low of September 14th. What we'll see is the U.S. dollar index just slightly above that 0.382 level. That says 82.14 is game as part of the next move for the U.S. dollar index on its way up, unless the bears show up and give us some additional signs. And they have not done that here this morning. We take a look at what is moving here in the pre-market. It's popping to the upside. You've got Gilead Science. They closed out at 65.01, trading out at 72.25. So they're having a nice pop here this morning. Celgene as well. They closed at 71.50. They're trading out at 78.14. To the downside here, well, you see, Apple. I think Apple was trading a bit higher this morning. Where is Apple? Apple closed out at 547.06. It's trading out at 553.85. We come back from our next break. We'll get the marks of the markets that are going to open, and then I'll take you for a tour around Apple, a chart that you absolutely want to be paying attention to. 877-927-6648. It is Marvelous Monday. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We've got the Dow up 21 points right now. S&P up 3.5. Composite up 12. Russell 2000 up 2 points. Apple trading up about $4. Microsoft down 6 pennies. Google up $1. Cisco off 2 cents. Intel up 3 pennies. As we take a look at what's popping and dropping here early on, you got Precision Cast Parts. PCP is the ticker symbol. They're up a nice 5% this morning. That's up $8.63. You've got Gilead Science, as we were talking about in the pre-market. You got Gilead up 12%, a little over 12%, up about $8. Sherwin-Williams, the ticker symbol there, SHW, having a nice pop this morning, up $5, moving into an area that where it last sold off. So we'll see what that's all about. You've got Celgene up $6. That's up 8%. Titanium Metals, TIE, up 42% here this morning. Nothing here popping up on my news screen. We'll go see what is behind that. That is a $5 move, trading out at $16.47. You've got, as I said, Apple trading up about $4. Amazon up a couple bucks and change. Dollar Tree up as well. If we take a look at what's moving to the downside, you've got Clovis on, what is this, Oncology. CLVS is the ticker symbol. They are struggling this morning, off 37%. I believe they got some news on one of their drugs out there, an outcome, and that is trading down 38%, off $8 right now. If we take a look at, you've got Vertex Pharmaceuticals off about 3%, F5 Networks down 80 cents, about 1%, Proofpoint, PFPT off 10% this morning, JC Penney, of course, they've been struggling, off about 3.5%. Our call-in number is always 877-927-6648. So let's go take a look at some of these stocks here, popping and dropping, then I'll go share with you the Apple chart. It's one that you want to pay attention to for sure. Let's start with Clovis. CLVS is the ticker symbol, trading out at $13.54 right now. Tons of volume in this equity here for only being open for 6 minutes. About 1 million shares coming back down into a swing point here from August the 3rd. Looks like this is a IPO that goes all the way back to November 16th. So this morning here, came back and is trading at that IPO price, which was a price range of $12.29 up to $13.39. It's trading at $13.53. Looks like quite a wild ride in this equity here. Made a high with no real volume on March the 21st out there, $27.55, 64,000 shares. Of course, you saw quite a bit of selling in this equity, 2.5 million shares in the early part of April. Let's go take a look at Gilead Science. That is taking out a most recent swing point on the weekly chart. It's trading to 72.89 right now. Looks like Gilead Science wants to at least get the 1 to 1.272. A to B equals CD. That would be 75.16. That's its next target. If we take a look at the A to B equals CD, our A point on this is going to be the low of September 3rd, 31.76. The B point happens to be the week ended February 2nd. Now, it made a little bearish three-candle configuration on a weekly chart pattern out there. That was a three-river evening star pattern. When that high was taken out, that's the high from February 10th. That's 56.50. When that was taken out, all of a sudden, that old resistance area was gone. We saw the area get taken out on a little bit lighter volume, about similar volume, August the 3rd. The week of August the 3rd, you get it closed just above it, out at 56.87. 58 million shares, was taking out 59 million shares, so close enough in my book. You got a real sign of strength in here. Happened to be the week of September 21st. 70 million shares to the upside. You've got Gilead Science here moving up higher. Again, that next level, that next target level on this equity is going to be 75.16. After that, it's 83.71. Let's go over and let me see. Let's go take a look at my Apple chart. So here's a chart that you want to pay attention to. Now, what you're looking at here, you're not looking at a candle chart. You are looking at a line chart, not a bar chart or anything along those lines. This chart here is something you want to pay attention to. So what we've got, and I did a bunch of studying on Apple and then a number of different charts over the weekend, but this was the one where if we take a look at correlations, pretty uncanny. So the black line that we've got on my chart out here, that black line is of Apple. And this is a weekly chart, so it goes back, if you're watching this on TigerTV, it goes back into the 2008 time frame. I would start really paying attention to it down here in the early part of 2009. The red line is Microsoft. Now, it's not Microsoft as of today. Instead, what it is, it's Microsoft, and I went back and I just simply slid it forward to when Microsoft made its peak. Microsoft made a peak on December 30th, 1999, when it was trading out at $53.25. So I went back all the way to 1999, moved the chart forward. That's the red line that you're looking at. Moved it all the way forward to go ahead and tie it right into the peak of Apple that we saw, which was in the middle part of September, I believe, September, October. I'll go back and take a look at it. But what we are taking a look at, if you take a look at the correlation, it's a pretty darn good correlation to the stock, making highs and lows. Now, what's important here is if you just simply take a look at the correlation of Apple's move down again, that's the black line. You can see that Apple, as of Friday, moved down in essence to a similar retracement level to what Apple Apple did, right down there at that bottom, that little fish hook that we see, what Microsoft was able to do. Again, that's the red line out here. Microsoft was able to make one more retracement on its way up. And if you go take a look at the retracement here, I'll go ahead and put this on the screen for you. That, too, kind of uncanny. Go from the low to the high. And what you're going to see out there, folks, you're going to see what Microsoft did before its next leg down happened to be a 0.786 retracement out there. So the question is, will Apple make a retracement? And if Apple does make a retracement, and we saw on Friday the first sign of potential bullish turnaround, we'll go take a look at the daily chart of Apple in a moment out here. If Apple does make that move, and why was I taking a look at Apple, folks? Because Microsoft back in 1999 also heavily weighted stock inside the indexes. In this case here, we've got the same with Apple. You know, the markets are not going to move higher without the NASDAQ, without the NQs moving higher, and they are not going to move higher without Apple. And if we just simply go ahead and I'll take this chart here and I'll just keep moving it forward, you know, you can take a look at Microsoft. Again, this was 1999, just simply moving forward. So don't be paying attention to the price scale on the right-hand side, the 552 level. That's what Apple is trading at right now. So this is an important chart to pay attention to. The question out there, and for you to say, something to think about, did Apple absolutely peak out here? Is Apple going to go ahead and repeat what Microsoft did back on December 30th, 1999? I say you should absolutely be paying attention to it. If we go take a look at the Apple chart on the daily basis here right now, let me put that ticker symbol in. Let's go take a look at it on a daily basis. What we'll see is not really a substantial bullish candle on Friday out here, but you did get a little bit of a move up there. Apple had made a 1 to 1.272, A to B equals CD down. Apple, though, coming in with volume. If you take a look at the volume on November the 9th out here, he had 33 million shares to the downside on Friday, another 37 million on Thursday, 33 million on Friday. And what was that coming into? Coming into a swing point that goes back into the middle of May 18th, that only has 26 million shares. Too hot. Coming into the swing point, the low was not tested. The low of that swing point, 528.66. That's your better test of a swing point reversal out there. You've also got Apple that has a high volume bar. That's this black line going across my screen here. That is the day of February 15th. The high out there, 514.26. The low, 496.89. We just have to wait for some bullish signals out here. I do suspect we will see a pop in Apple soon. May not be today, maybe over the next couple of days out there. And what you want to pay attention to is Apple really forming the exact same chart pattern that Microsoft did out there. Let's go take a look at the ETFs, the 4 ETFs that we've got tracking the markets. Let's go start with the Qs. On the Qs, what you can see here is coming into Friday's session, it made an inverted hammer candle. That is a bullish reversal sign. However, it is the weakest of all the bullish reversal signs that are out there. So, it's not one where I get overly enthused. You did get the Qs getting into a little bit of a oversold condition. We know that has to work its way off. Working its way off is done really one of two ways, either moving sideways or a bounce to the upside. You can see the 0.786 Gartley pattern also coming right in at the swing point from July 25th out there. That swing point, 46 million shares. Again, as the Qs were moving down, you had 70 million shares on Wednesday, 58 million on Thursday, and 51 million on Friday out there. I think the Qs have a lower price here. I think they want to get into that 62-ish, 62.76-ish area one more time, maybe give us a better candle signal than the one that it generated on Friday out there. Let's go take a look at the other 3 ETFs for the markets. Let's go to take a look at the SPYs. You got the SPYs here trading out right now at the 138.57. You'll also see an inverted hammer candle out here that was completing as it was coming into its swing point from August the 2nd. August 2nd, 200 million shares. On Friday, you had the SPYs do 200 million shares as well. You'd like to see a lighter test of that. Today, quite frankly, is an ideal test for a lighter day. With it being Veterans Day out there, very good possibility that what we will see here is light volume. So you'd love to see the most bullish thing would be a push lower on lighter volume, a rejection of a swing point, and that would set up the opportunity for the bulls to move back into the game here for a little while, maybe through the end of this week, maybe a little bit further. Let's go take a look at the Dow Diamonds. You've got the Dow Diamonds trading out at the 128.18 level, similar candle formation. However, the Dow Diamonds now coming into that August 2nd swing point. That had 10 million shares, actually closed below it on Friday, and closed below it on Friday with 6.5 million shares. So in the case of the Dow Diamonds, you had the test of a swing point, a rejection of that swing point on lighter volume out there, but I don't think it's going to be the Dow that is going to pull us up. I think it's going to be the what has been the weakest index, being the NASDAQ 100, being the Qs out there. I really think that's where we've got to take our cue from, no pun intended, and not take our cue from the Dow Diamonds. Let's go take a look at the Russell 2000 or the small caps, the IWM out there. Got the IWM trading out at 79.57. The IWM coming into an area where it should really, it's got a swing point. I would prefer to see the IWM come down and at least test this little open gap between the August 2nd and August 3rd level out here. The August 3rd low would be 77.65. There's 52 million shares down there. On Friday's move, you had 33 million, you had 42 million on Thursday. So you're starting to see the right volume configuration for the IWM. It would make sense for the IWM to come back and at least test the August 2nd swing point, that high out there, 77.31. As we take a look at our markets here, you've got the Dow is up 12 points, the S&P up 4, composite up 14 right now, small caps up a couple of points, Google up $3.76 out here. Let's go take a look at Google, see what that is doing, because you're going to need more than just Apple to move inside the Qs. If we go take a look at Google, got the daily chart up here on the screen. You can see Google coming down with significant volume, doing that on October the 18th and 19th out here. You can see it getting into the oversold condition. If you take a look at how Google really tried to work some of that off, was really nothing more than just a move sideways before it moved lower again into Thursday and Friday, getting again back into a little bit of an oversold condition. Quite frankly, if Google doesn't clear the this candle from November the 8th out here, and that's going to be an important candle well, no, it's not really the November 8th candle that's so important. So let me just simply rephrase that. If we take a look at Google, what we see is that the next stop for Google to the downside, $640, maybe $603. In fact, if you were to take a look at A to B equals CD patterns out here, 603 would at least be the mark, maybe, quite frankly, coming all the way back into the June 14th level, back in the 560-ish range out here. So Google at this stage not indicating any kinds of signs of strength out there. Let's go take a look at titanium metal, up 42% here this morning. And, it's some merger news. Okay, so that's what it is. So there's some merger news out here. Let's go take a look at the stock chart anyways. TIE is the ticker symbol. I do expect we will see all kinds of merger news for some time to come now. Why? Because of the strength of the U.S. dollar index. And what we have seen here, getting through at least three-fourths of earnings season, maybe more than three-fourths of earnings season, we've seen all the big names struggling on the top line out there. And one of the easiest ways to increase your top line is go out there and acquire somebody, because when they do their currency conversions out here, and I do believe that the U.S. dollar index, will continue to be strong throughout the next year or so, that will continue to put top line pressure on all of those large cap stocks. 877-927-6648. Dow's up 21 points. S&P's up 4. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. We've got the Dow up 9 points right now. S&P's up 3, Composite up 9. And stay tuned because, yes, we've got the Money Masters show with Tom and myself coming up next. Then, as we do on Mondays, we go up to Newton, Mass. to Basil Chapman, then off to Arizona to Larry Pesavento, then off to, on Mondays, we go to Daryl Martin, then David White, Ken Shreve, and then the Tom O'Brien show from 4 to 6. If you're looking on Tiger TV right now, you see the 4 different 30-minute quadrants retracements here of the futures contracts. In the upper left, you've got the Russell 2000. The upper right, the Dow futures. Lower left, the NQ, and the lower right, the ES Mini. If you can see on the screen here, I've got the device turned on here that measures the retracement and expansion of swing points as price was moving up into the 10 o'clock time frame out here, was moving into the 0.618 level on most of these. Actually, at 7:30 in the morning on the Dow, the ES Mini getting up to a 618 retracement at 8:30 this morning. It was the Russell that took till about 10 o'clock out there. So running into a little bit of overhead resistance out here. So we can see a little bit of a tug of war as price just simply continues to move sideways. Let's go take a look at gold. Let's take a look at Goldilocks out here. We're looking at the daily chart of gold. Gold trading out at $17.34 right now. That's up $3 and change. Silver's trading off about 7 pennies out at $32.52. But as we take a look at gold, you're going to see a couple of squiggly lines here on Steve's chart. The one that I want you to pay attention to is the one in the upper quadrant of the chart. That is the U.S. dollar index. In fact, let me just get rid of a few lines out here. We can always come back and draw these in. In fact, we'll do that just to get an idea for where gold may be headed. Now, if you're taking a look at this, is the U.S. dollar index, the red line that you're seeing going across my screen here. It's inverted. That means if the dollar is getting weaker, it's on its way. The line would be moving higher, and you would suspect that gold would also move higher. As that red line is moving lower, you've got the U.S. dollar index getting stronger. You would expect prices to move lower as well. Now, this is a directional indicator. It's not a way. There's not a way to correlate, what a 10-cent move in the U.S. dollar index equates to in gold out here. It is a directional indicator. What we can see here is really this has performed very, very well, as you would expect. Why? Because commodities are priced in U.S. dollars, whether it's gold, silver, natural gas, whether it's oil out there. And here what we see is we're taking a look at a daily chart. What we can see is last week we saw the U.S. dollar index getting stronger. You can see this little red line. I'll blow it up a little bit more on the screen for you. You can see this little red line was actually moving down. That meant that the U.S. dollar index was getting stronger, and gold was moving in the opposite direction out there. Folks, at some point in time, the correlation will absolutely come back out here. That is why I say that gold has another leg lower, because what you did see with gold is it got to an oversold condition. Whenever you get to an oversold condition inside any market, it has to work its way off. It's not a straight line move down, not a straight line move up, and the way that you work yourself off is you move sideways or you simply start moving up. In the case of gold, it decided to move up. Was there some election stuff, some other fear out there? If they talk about the fiscal cliff out there, maybe there was, but this correlation will come back, and when it does come back, if you believe the U.S. dollar index is moving higher, don't believe that this correlation will become unglued for too much longer. When we started off the show today, folks, we were talking about preparedness, because that is a step for success, and it's all about dreamers and doers out there, folks. Dreamers and doers, the world typically goes ahead and separates folks into those two classifications. Dreaming, though, it's just another name for thinking, for planning, for devising another way of saying that you're just exercising your soul, your steadfast soul out there, holding steady to your dream. Dream, folks, and make sure you put together your plans. Thanks so much for being here. Tom and I will be up next. If you're off to start your day, I'll look forward to seeing you tomorrow morning. Take care, folks.